Hey, and welcome to this week's episode of Homescreen. Today we're going to be talking about the FinCEN leaks. So the leaks that have just been reported in the press, linked by BuzzFeed News, and going to be talking a little bit about the implications for banks and what their customers might think about this in the long run. Today, I'm joined by Joe, who is a member of the Pulse team here at 𝗍𝗲𝗴𝘆. You've seen him from different episodes in the past. How's it going, Joe?
Very well, thanks, Jim.
Is this the third setting you've been in the past, 3 episodes?
Yeah, I'm mixing out with the settings. A few more books on display this time, so hopefully that'll have a good impact.
Absolutely, and a few different, some curtains drawn as well. You clearly don't want people seeing inside, knowing what's going on in there.
I don't want them to locate me. That's the key.
Cool. So yeah, we're going to be chatting today about this kind of new these new leaks, what it means, and showing you a few examples of the different brands that can help or have taken approaches to solve problems around this sort of space.
Yeah. So Jim, why don't you tell us what's happened here?
Okay, very briefly, because there's other resources in 𝗍𝗲𝗴𝘆 which will talk about this in more detail, but this is a huge leak of files from a US-based financial crime enforcement network, where over 2,000 so-called suspicious activity reports, or SARs, hundreds of other documents appear to show banks have been unable to prevent billions and even trillions of dollars worth of money laundering from moving through different bank accounts.
And can you just tell us what a suspicious activity report really is?
It's important to lay out what suspicious activity means for a bank and how it's regulated. You might have remembered something that happened maybe a few months ago. There was some issue with Monzo freezing access to accounts and stuff here in the UK. And that's because of the way that banks police suspicious activity. So in the UK we have, and in other jurisdictions which are under this global sort of anti-money laundering legislation and regulations, you're not actually allowed to tell people when they're under when their accounts are being kind of checked for money laundering purposes, and so you just kind of freeze them off and hold them off. And a suspicious activity report is something that a bank will submit to a regulatory body for further investigation. But it's really important to say from the bat that these are not necessarily fraudulent. These are just suspected of being fraudulent. So the 2,000 or so suspicious activity reports are referring to things that a bank has deemed might be suspicious, and would but they'd like to get further checks on. Now, the activity that we were talking about before, where you're not allowed to talk to people about what's going on, is called tip-offs. And banks are not allowed to do that, which means there's a lot of confusion and kind of a lack of clarity about the process around suspicious activity reporting. And the bank controls the relationship with their customer. So they're kind of in charge of policing that money laundering. And the regulator is just responsible for kind of setting the guidelines. But it's really important to kind of note that a bank can usually, and this is one of the problems with money laundering, is they can only see what's going on that one person's bank account that they hold. They can't see what's going on within different bank accounts. And so they have to raise these kind of these reports in order for this to be checked out on a much larger scale by the regulator. And then they're able to make a decision based on that. So the bank is responsible for their relationship with the user, but not for that user's other bank accounts, for example. And this means kind of the central aim of these investigations is to find the ultimate beneficial owner of the money. And we'll see in sort of other instances that finding this is really tricky. It's a really hard thing to do. But it's part of one of the key areas of technological innovation that's happening, especially in the Regtech space at the minute. And I guess what we're chatting about today is how banks are approaching Regtechs, these kind of great institutions that are building really smart technology using these great approaches, and then also ethics. So how are they being treated, how are their customers perceived and perceiving their banks?
I suppose it's some of the outrages come from this is another time where it's been a leak, which has told us that there's a lot of wrongdoing at banks. As you said, not all of these suspicious activity reports necessarily mean wrongdoing, but a lot of them will. And it's quite similar to the 𝗍𝗂𝗏𝗏 case in that sense, where a leak has told us that seems like the regulators aren't doing nearly enough. So a lot of these took place a long time ago, I think between 2000 and 2017. I think FinCEN said, these leaks have now resulted in a lot of spoiled investigations, ongoing ones, and compromising these. But I'm not sure that that's quite enough, really, because we'd like to see the detail on those, really. Why haven't these been followed up with, and what are the details surrounding these investigations?
Yeah, I guess it's quite hard for them because ultimately the bank is responsible for policing the relationship between the customer and themselves. So the regulator would usually stepping in situations, as we've seen with kind of Wirecard, in terms of the German regulator getting involved and actually raising the issue up into a legal matter. But for a situation like this, the system is in place to raise these reports, but the emphasis is very much on the banks to do this and not on the regulator. It's sort of as you said, like they could have done more with it when it had happened, but when these documents had arrived with them. But there was a method in place which isn't particularly good and particularly innovative, and the regulators are kind of having to be party to that, where maybe they wouldn't necessarily want to be. And the banks really don't have a massive incentive to improve the technological efficiency of that process. But maybe this is exactly what's needed now to help push that move on to these different providers.
Sure, yeah. So we're going to be taking a look at the Regtechs, you say, in particular on FIDO, as an example of really good anti-money laundering practices. So they've built some of the leading tech in this department, and are involved with a lot of the journeys that we've seen on 𝗶𝗃𝗃 and some of the best fintechs. So also we're going to be looking at kind of those built on top of companies. So data to offer more bespoke, know your business and anti-money laundering services, similar to company houses and others. And hopefully that kind of fixes the problem of finding important company financial information on a kind of slightly broader scale, and detailing those involved more specifically. And also finally, we're going to be taking a quick look at kind of those companies who have put ethics at the forefront of their product offering. A lot of people have kind of grown increasingly frustrated off the back of these kind of leaks with the traditional going-ons at banks. Things don't seem to be changing. And there's a lot of products out there that kind of serve these markets very well, and put that ethical kind of offer at the forefront.
Yeah, exactly. I think what we'll see from the next series of journeys is that there are a series of players that are making the customer experience and the kind of the user's experience so much better that it makes sense to include them in the product. Then we have like a really sophisticated kind of tracking based on companies' house data. And then we've also got those, as you said, which are kind of saying that the offer to the user is super important. And that more important in an era of kind of low savings interest rates and things like that. People are more interested in their carbon footprint necessarily than the amount of money that they can save from a stock or an investment account or a savings account. So those three themes will kind of run through the next three journeys that we'll look at. So up first, we're going to take a look at the way that a user will experience AML. Just to caveat this and just start off, we had Fido on the show a few weeks ago to talk about this into more detail. So if you want to see how a really sophisticated kind of European fintech works, then that is a great introduction to the way that they run product there and solve particular issues around anti-money laundering. And also, by the time this episode goes out, we should hopefully have recorded an interview with Hummingbird, who are kind of one of the leading US players in this space, who are coming over to Europe in the coming months to launch their offering as a nice bit of competition. So two great examples there of really market leading anti-money laundering Regtechs that will partner with organizations like banks and fintechs and tech companies. So in this instance, we can see the back end of 𝗲𝗻𝗻𝗀𝗀. The front end is a software development kit, so they can see how they can get their face scanned and so on. But from the fintech's perspective, they can really see kind of how their system is performing, how many of those checks have been completed, and what the pass rate's been on different individuals and over a certain time period.
Yeah, I think actually what the regulators often get criticized for is the lack of kind of data-driven results where they've claimed to have put lots of money behind. So seeing this kind of thing is great, especially when it's so well integrated and user-friendly.
Our mission, right? 𝗲𝗻𝗻𝗀𝗲𝗀's mission is to create an open world where identity is the key to access. We had that like in the office on the wall. And it is a mission that I myself genuinely believe in. And so what we really want to do is to enable, so there's a bit of knocking, enable people to, prove their real identity to the business so that they can access goods and services that they're entitled to. One of the kind of key verticals that we're focusing on is obviously financial services, because they're regulated, they're required by law to know their customer in order to mitigate any risk of money laundering or terrorist financing, etc., etc. So how do we provide that service then? We, as you've seen a bit, we provide a SDK that allows customers to easily incorporate a document and selfie capture experience into their own application.
Yeah.
So the SDK will capture the images that again then get sent to our backend, where we have a hybrid of machine learning algorithm as well as human experts who are specialists in document recognition, document verification, who can then analyze document to assess whether it's genuine or not. And also we do a match between the selfie and the document to assert that the person is the rightful owner of the document itself. We want to help a company mitigate that during the onboarding journey, but we also want to be able to do that later on during the user life cycle as well, potentially at big sort of what we call moments of risk when you make a big transaction, etc., etc. We want our product to be very easy to use. We want to minimize drop-off. We truly believe that our product needs to be inclusive and accessible too.
So the really interesting aspect of what 𝗲𝗻𝗻𝗀𝗀 are doing is that they're building their Regtechs product into the customer experience, as I mentioned a minute ago. And what that means is that right at the beginning of the user's experience of the platform, they can sort of see the benefits of using sort of these digital services in order to, rather than going to a branch or something and having to confirm their identity this way, the user has a much better experience. And so those fintechs will experience much less drop off as a result of that. And then the fintechs themselves get the benefits of UX kind of success and they're kind of feeling the best way into leaning into having these services built into their product. And for someone like 𝗲𝗻𝗻𝗀𝗀𝗀, as we've seen from that video, this part of the onboarding flow is just the beginning for them. Like they want to be involved in the full stack. They want to be regulating the product, making sure that everything that's happening is happening spot on. Right now it's happening at onboarding experience because that's when a bank would traditionally do it. But if 𝗲𝗻𝗻𝗀𝗀𝗀𝗀's suggestion kind of will come to pass, it means that they'll be able to be used at payment stage or at applying for different financial products through the app as well. They want to be able to get involved further on down into the stack to help with transactions and to make sure that they can fight anti-money laundering in a much more technologically astute way. And I think that the best way of summing it up is what Simon Taylor, who's one of our colleagues here at 𝗲𝗻𝗻𝗀𝗀 said. This is kind of despite the creation of new, more efficient Regtech solutions, These are capable of performing automated transaction monitoring, automating KYC and AML, and outperforming human agents. Thanks to the introduction of machine learning. For example, digital onboarding has been seen by the banks as a customer experience benefit rather than a compliance necessity. And I think it's when you're able to do that with product, you're able to kind of really push the customer need to the forefront of what you're building, whilst also maintaining the sophisticated, the brilliance of what you're building from a compliance perspective. Then you get these people on side and you're able to build them into the flow.
It's that combination of adhering to compliance and also great UX. I mean, it's the onboarding that the ID verification rather that on FIDO enables is often this kind of standout point in a lot of onboarding, and really speeds it up and has actually allowed it to be mobile only in one go. And that's why you can see these great kind of 7-minute onboarding journeys for some of the challenger banks.
And what would Onfido typically be looking for information wise, from based on what you've seen? What would they typically require from a bank in order to complete a kind of KYC process?
So it varies quite a lot. It will be showing ID back and front, and also recording your face and sometimes saying something which can be a bit awkward on a public transport, something like that. But it varies quite a bit. But it's that kind of quite funny stage you find at the beginning of those digital onboarding experiences. But it's over with pretty quickly, which is impressive considering the complexity involved in that.
Cool. So that was the benefits of having a really good, sophisticated customer-first approach to these Regtechs, these Regtech kind of scenarios. Next up, we're going to take a look at some of the regulations going on in the background to help businesses with other particular problems. So for company, this is an Austrian company. They are able to provide information on shareholders by aggregating information from different company registers. So company registers, organizations like Companies House, for example, Companies House has an API, and company are able to pull data from there. And then they decided that they also would gather the same data from different company registers. And that will allow them to do things like this, which is universal beneficial owner discovery. It allows you to kind of connect up different people based on who's registered for that business to a company, and ultimately identify, if you're a lender or if you're a mortgage owner or something like that. It'll allow you to see if someone is doing money laundering or something like that. So very prescient to what's going on here, in the sense of the technology that could help with anti-money laundering. Company do a fantastic job of providing sort of visualization tools, as you can see in this example. They kind of allow you to do all this cool stuff. But they ultimately, the aim is simple. It's to connect their platform to different company registers from around the world. Some of those will have, you'll have to pay for access to those, but some are freely available. They just aggregate it all in one place and sell those access to different companies. And in this instance, we're able to see how they're able to make a clear path with all these different companies right through to that beneficial owner right at the end there. So really interesting visualizations, and also able to change that up as well to offer more interesting paths.
So I think you kind of touched on it there, where this would fit in nicely into the kind of issues that regulators are facing at the moment in banks.
All the time we were thinking the other industries that need this must be big corporates who have long supply chains, because they have to do this sort of check. And people like banks, legals, particularly real estate, they must have this requirement. It just seems sort of self-evident to us that they must have this requirement because they get people coming to them all the time. And why would you, if you were a bank, say, why would you ask a client walking in the door to give you a piece of paper to prove to you that what he's saying is true? That actually makes no sense at all. You would go to the source and get it, and then you can compare what he claims with what the actual source says.
3 companies that were looking to work together to help with the issuing of bounce back loans. So these are the loans that were issued by the government in the UK to support with business businesses staying afloat in the early days of the pandemic. So the bounce back loans, they had the problem of only being issued by banks who were not able to do know your business checks, and therefore were susceptible to anti-money laundering. They were unable to do those. And so what we needed was the ability for a company to be able to say that someone from a business was who they say they are, and it's not a shell company or something like that. But also to sense check that against really sophisticated kind of government records. They could do that by a company's house, but as I've alluded to before, those are often, London is notoriously the kind of the gateway to money land. So the place where money is stashed and stored and put into different places, like the Cayman Islands, for example. And so the ability to kind of have this global register of different bank accounts and to ultimately identify who owns what is really powerful, and could have helped with speeding up the movement of money to those businesses that actually needed it. They could have done that really quickly if they'd have had a tool like this available to them in the first instance. So now we'll hear a little bit more on why the company decided to build this product.
So we're going to take a look at the Bunk SuperGreen account. So this is available to Bunk premium business users and premium Bunk users. It really is quite a popular offering. It basically allows you to plant a tree for every €100 that's spent. And the idea is that it's just capturing these audiences that have kind of decided to step away from the traditional banking offering and actually believe that there's more to be offered, more that can be done in combination with just traditional banking, with the normal way you bank every day. So you get lots of information here about what's saved, and great visualizations, as is typical with Bunk. They've always kind of had great UX and this kind of unique visual identity. And I think this has just been very popular. And I also think that the more that we see news like this, and the more we see actually things aren't changing, the more we're going to see of these kind of products, and the more popular they'll get, I think.
For sure. Let's hear from the head of product at Bunk to explain kind of why they built this function in the first place.
Any card purchases across your subscription, for every €100 we'll plant a tree. So the central thesis is essentially that increasingly people expect that the choices that they make, and the demonstrable ones and profound ones are those that they choose to make with their own money, ultimately add up to making a difference. And on that basis, banks have a central part to play in helping the world to become a better place, because it's a central component to the entire system of how the world works, right?
Yeah.
So we don't want people to spend more. We don't want to drive consumerism. What we want is to offer people that want to make an impact on the environment and want their choices to have an impact on the environment a super simple way of being able to basically vote with their spend.
So that's really interesting. And as kind of, I think he alluded to there, people are voting with their feet. The community of Bunk actually came out recently, I think it was only a few days ago, that the community of Bunk have already planted 1 million trees in Madagascar from this feature alone, which is extraordinary considering how many euros it takes to plant a tree. So the people are really, they have a lot of users and they care about this enough to activate it and to use it. So a really great, I guess, innovation for them.
We've seen a lot of other people moving in this direction. Flow, for example, an Italian current account that prepaid current account that is built off the back of ethical banking. Obviously, we've got people like 𝗙𝗵𝗃 from the Netherlands, who founded in the 80s, their mantra is purely ethical banking. Obviously, it doesn't mean to say that none of these people have issues and have to report things that or things are being underreported, but it just shows that the foundations are much better, and that they kind of got pure intentions from the start. So hopefully we'll see a shift in the way that people respond to different banking products.
Yeah, I think that's right. And I think it's obviously great that these initiatives are like definitely taking hold in the mainstream. I think we'll probably see a little bit more about this in the future, maybe a little bit more now. But we are seeing encouraging signs from things like the Global Resource Initiative, which is a legal body set up by the UK government to kind of to moderate large government, organizations and make sure that their practices are legit. So they've recently requested a law into government which would kind of moderate on a few different imports. And so a general kind of, I think, and I hope anyway, movement in terms of not just the movement of people with their money in the case of Bunk, but also in the lawmakers taking a look and seeing that people don't necessarily want to stand for this kind of thing anymore. So 3 different really interesting approaches there, I think we'll agree.
Yeah.
What would you what would you say to round off about this? Anything?
Yeah, so ultimately the responsibility for policing money laundering sits with the banks themselves, and the way that SARs and tip-offs actually work. And it's clear that there needs to be some kind of change there. We've yet to have that much of a response from the banks. FinCEN did say that they'd change the way that they operated anti-money laundering procedures. Interestingly, that came out just days before the leak, so that could be a bit preemptive. But also there's room for technology to solve some of these issues, as we've shown just a couple of them so far. So there's room for partnerships, not just with FIDO, but also with those really working to solve AML issues and touching on UBO procedures as well.
Yeah, I agree. And it's really cool also to see like usability and UX put at the heart of how these companies are achieving kind of excellence in these spaces as well. I guess one of the things we're trying to achieve here with Pulse is show people how important usability and UX is in order to make your product better. And there can be no more glowing a statement about that than seeing the way that Onfido operates, and also seeing some of the numbers about how successful their companies that use it have been at signing up customers. So UX improvements that happen at sort of digital onboarding stage are sophisticated and really helpful for those companies in improving their own product and their offering to their customers. But I'm also super excited to see the way that usability actually moves these innovations down further into the stack, so into the way that these products are set up entirely, not just at onboarding, at the digital onboarding phase, but throughout the experience. So how can a company help people to lend better? How can they help people move money better and more safe? Regtechs seem to be right at the heart of what's going to be offered there. And then finally, fintechs are now, as you can hear and see there based on that Bunk example, are putting ethics right at the heart of what they're trying to offer. So especially if they're going after a younger audience who are kind of under inflationary pressure to kind of deflationary pressure to invest their money rather than kind of put it into savings accounts or anything like that. You know, if you've got the option between, can I put my money in this account which will give me a tree for every 100 euros I spend, or can I get 1.05% interest on my savings account? You're going to go with the former. It'll make you feel so much better than that slight tiddly bit of growth that comes from your savings account. So fintechs are recognizing that, seeing that maybe the balance is shifting a little bit in the way that people are thinking about value and about the environment in that equation, and ethics more particularly. Social responsibility, corporate social responsibility will be an important part of the future, and will be interesting to see how these big brands respond to it. You know, does that mean that they put things like reporting on money laundering out into the public a lot more than they currently are, making it more visible what's going on, and also making the world a little bit more of an ethical place by using these smart technologies to do so?
Yeah, absolutely. And I think a lot of the responsibility does fall on us, because the changes won't happen naturally. It looks like these stories are already falling off front page. A lot of the top newspapers haven't even mentioned it at all. So it does fall on us as customers to choose where we bank. And actually, that will have an impact on the way that the traditional incumbents operate as well. We've already seen NatWest, they're testing a new feature which it counts up your carbon emission based on your spending. And that probably comes off the back of the way that customers are changing the way that they choose to do business and who they do business with.
Yeah, I think it's super important to make sure this kind of thing remains visible. I think one of the compelling things about Wirecard is there's a very clear kind of villain involved there. Whilst maybe this has dropped off the ball because there's no clear bad guy in the situation. So making sure that this is something which people care about and are able to talk about freely and openly, and put ethics right at the heart by voting with their money, with their spend in the accounts that matter, using the tech that is sophisticated. That is the greatest vote of confidence. Great. Thank you very much for chatting today. And thanks all for watching. As I said at the beginning of the show, next week we'll be chatting to Hummingbird. The UK will be welcoming this American regtech into the market to compete with the likes of Jumio and Onfido. So really good to see what their product is going to look like and how you as banks will be able to deal with them. Thanks very much.
Thanks, guys.